Welcome back to Bazaar Morning Call. There is so much to talk about today, so let's get down to it very quickly. The SGX Nifty is indicating a strong start above the 18,200 mark, and Kotak Mahindra Bank could be one of the stocks batting for the bulls this morning after a very strong set of numbers. Abhishek is here to give us the lowdown. Abhishek, good morning.
Morning, Sonia. So, I've not seen a 3% ROA for any commercial bank in India with a balance sheet of more than 1 lakh crore. So, it's perhaps the best ROA that you can find amongst the large banks at 3%. Net interest margin is at record high at 5.75%. YOY, the NII growth is one of the best that you are seeing in last 7-8 years. A retail segment there, the loan growth was pretty strong at 23.5% YOY and about 5.5% sequentially. Asset quality, one of the best in last 7-8 years with gross NPA ratio at just 1.78% and net NPA ratio of 0.37%. Operating efficiency is one of the best in last 7 quarters with cost to income ratio declining to 43.9% when compared to 50.3% in the previous quarter. On the flip side, the CASA ratio is at 15-quarter low of 52.8%. PNL, both in terms of NI and PAT, it's a beat on our poll. Back to you.
All right, Abhishek, thanks a lot for that. Well, I'm looking at UltraTech Cement, and the numbers are more or less in line with what the street was working with, but that's clearly the market leader with bulk of the market share. So I'm going with green on that one. First, running you through the numbers, both the revenues and the EBITDA number more or less in line. But what's encouraging is the consolidated EBITDA per ton. Now, that's improved by closer to under 150 rupees on a sequential basis. Good news, on a year-on-year basis, it's still a little lower. Now, the good news is the average, fuel consumption cost that came down to around $194 per ton. But we've seen a sharp drop in pet coke prices. And the benefits of that will flow through in Q1 and fully in Q2 as well. So though prices are not going up, input costs are cooling off. And that's what will help the EBITDA per ton improve from this 1,050 odd levels. They have a big capex that's underway. Close to 6,000 crores of capex is what they spent in the last year. And in spite of that, they went ahead and reduced debt as well. That's very, very good news. So good operational performance, debt under control as well. Morgan Stanley, they stay overweight out there. They're also adding the fact that valuation-wise, well, the stock is trading at a discount in comparison to its 10-year average on an EV upon EBITDA basis. So that's why going with green on that stock. But Sonia, tell us about the auto sales numbers. It was a mixed bag, so we went with amber, but run us through the breakup.
It was a mixed bag, and the one big takeaway is that there is a slowdown that we are seeing, especially in the growth rate. So I'll give you some examples. Maruti's numbers were not too bad, but it's still a low single-digit growth that we're looking at, about 6.5% growth on a year-on-year basis. That's led by domestic sales. Domestic sales growth is 8.5%, but exports have been under pressure. So in that context, Maruti is mixed as well. Eicher Motors actually had a good set of numbers, both for Royal Enfield and for the commercial vehicle pack. It was an 18% growth, both in the motorcycle business and in CV sales. So the street will definitely like that. The disappointment really has come in on Hero MotoCorp. Over there, the numbers are weak. Below estimates, total sales have fallen 5.2%, and below Nomura's estimates of 4.5 lakhs, the company only delivered 3.96 lakhs. Tata Motors as well, total sales were under pressure. And it's interesting, Tata Motors is seeing a fall in their commercial vehicle sales at a time when peers like Eicher Motors are reporting a big growth. So, you don't know if it's a base effect, but there is definitely weakness in Tata Motors numbers, and that's not something that the street is going to like. Total domestic sales down 4%. And finally, TVS Motor, once again, single-digit growth is what we've seen, up almost about 4%. Very, very, nothing really to write home about in terms of TVS Motors numbers. So I guess that's the reason why we're going with amber.
All right, sir. Yeah, thanks a lot for that. But back to Abhishek. Abhishek, a lot of results for you on the weekend. You're tracking SBI Cards, Mahindra & Mahindra Finance, as well as L&T Finance. Let's go get cracking.
Well, Nigel, to begin with the SBI card, the net interest margin is perhaps at an all-time low. So from Q1 FY21 to Q4 FY23, their revolver rate is down from 45% to 24%. Yield is down from 22.8% to 16.7%. And net interest margin is down from 19.2% to 11.5%. Credit cost is elevated. It has increased to 6.3%. Both YOY and quarter-on-quarter, it's an increase over there. Asset quality seen a marginal hiccup with gross NPA NPA ratio increasing on a sequential basis. A card receivable per card is actually just up less than 7% YOY and a decline of 0.1% sequentially. Total income up 30% YOY and 7% quarter-on-quarter, while PAT is up 2.7% YOY and about 17% sequentially. M&M Finance, they have beaten our poll in terms of PNL. To start with, AUM growth is at 26.2% YOY and about 6% sequentially. Spreads have declined 20 basis points for FY23 when compared to 22. The cost to income ratio is perhaps at a 25-quarter high. Operating profits are down 5.5% quarter-on-quarter. Asset quality has seen improvement, and in terms of PNL, both the ANA and PAT is a beat on our poll. L&T Finance, now it's a surprising factor that their AUM in absolute value is at 21-quarter low. So they are seeing fast rundown of their AUM. Asset quality has seen some hiccup. Gross NPA ratio has increased by 45 to 50 basis points on a sequential basis. Disbursements are down 16.5% YOY and about 6.5% sequentially. AUM is down both YOY and quarter-on-quarter by 8.5%. Net interest margin is at all-time high because of the base effect in the denominator factor. ROE continues to remain weak. Both the ANA and PAT figure is on your screen. Back to you.
All right, Abhishek, thanks very much. And we'll be speaking with many of these companies a little later on the program. But there are more financials which reported. IDFC First Bank and RBL Bank are next. Back to you, Abhishek.
Well, Prashant, IDFC Bank is a beat on our poll in terms of ANA and PAT. Their asset quality has seen improvement. Gross NPA ratio and net NPA ratio are perhaps the lowest in last 9 quarters. Deposit momentum was strong at 55.2% YOY and about 8.7% sequentially. Loan growth also remaining strong at 26.3% growth YOY and about 6.5% quarter-on-quarter, which has meant that the net interest margin is at all-time high of 6.4%. Other income also robust, growing at more than 21% quarter-on-quarter, which has aided the ROA. Cost to income ratio or the operating efficiency is at 7-quarter low. ROA has come in at 1.4% when compared to 1.11% in the previous quarter. PNL, both the ANA and PAT is a beat on our poll. RBL Bank is on expected line that it was to improve on a sequential basis. So quarter-on-quarter, Street was anticipating a good quarter from the bank, and bank has delivered on the same. Gross NPA and net NPA ratio are the lowest in last 9 quarters. Net interest margin is at 4-quarter high of 5% when compared to 4.7% in the previous quarter. Operating profits, you are seeing a 7th quarter of YOY decline in operating profits. RWA to advances is at 11-quarter low of 121%. The return ratios are one of the best in last 15 quarters. ROA has touched 1%. However, ROE remains weak at 8.1%. In terms of our poll, the ANA is slightly below our poll, but a PAT is a beat on our poll. Back to you.
Okay, thanks a lot for that. It's a good quarter from RBL Bank. Surbhi is joining in now. She has a couple of stocks on her radar. She's looking at Vedant Fashions, Adani Green. How was the performance this time, Surbhi?
Thanks so much for that. So Vedant Fashion reported a good set of numbers. Their revenue was up 15% on a year-on-year basis. The gross margins saw a little bit of compression, came in at 72% versus 75% same time last year, but they've managed to maintain their EBITDA margins at 49%. The PAT was higher by 23%. Their retail growth in Q4 FY23 was up 21% on a year-on-year basis and over 46% when you compare it to the pre-COVID levels. The same-store sales growth was up 14% on a year-on-year basis and up 16% when you compare it to pre-COVID levels. Moving on to Adani Green, again a very strong set of numbers. Their net revenues were up 78%. The EBITDA was up 2.3 times. The margins have come in at 87% versus 67% same time last year. Their FY23 operational capacity was up 49% on a year-on-year basis, and the sale of energy for the full year was up 58%. The board appointed Amit Singh as the CEO of the company and also moved Vineet Jain from MD and CEO to MD of the company.
All right, thanks a lot, Surbhi, for that, and thanks to our entire research team. Here's a quick recap of our top stocks with positive news flow. There's Kotak Mahindra Bank, UltraTech Cement, M&M Financial, IDFC First Bank, RBL Bank, Vedant Fashion and Adani Green. The auto stocks in focus in the back of April sales is quite a mixed bag. While stocks with negative news flow this morning, there's SBI Card and L&T Finance. But let's also give some time to assess what's been happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, I'm looking at the crude oil price is still holding below $80 a barrel. Actually, for the WTI, it is still below $76 a barrel. But after 5 months of losses, April has seen about a percentage of gain come in for both the varieties. So breaking that the pattern, really. But expectation of rate hikes from the U.S. Fed and the ECB this week will keep the markets jittery. So will the fact that the Chinese markets are shut till the 3rd of May. This is the Golden Week holiday for them. But China manufacturing activity and the services numbers, all of that has come in on the weaker side, and the statement from China saying that they are going to push growth, come out with some stimulus measure, is what is keeping hopes into the market. Having said that, if you look at the metal prices, after gaining in the day yesterday, we have seen iron ore prices slip to a 5-month lows yet again. Steel is trading at a new 4-month lows right now. Copper prices did gain 2.5% in New York session yesterday, but they are trading in the negative right now. And so is the case with aluminum and zinc as well. All of them trading slightly in the negative. China participation is out, the volumes are lower, and upticks are being pulled at.
All right, Manisha, thanks very much for that.